Scott Bauer is the CEO of Prosper Trading Academy. He's standing by to help us take a look at the numbers. Scott, I want to pull up a look at CPI here so we can show our viewers that for the most part it came in a little bit soft, flat I guess is the best way of putting it. Month to month we had it at 0.1% in line with the prior numbers and in line with expectations. A little bit softer than expected on the year to year at 1.7%, but if you take a look here at CPI minus the food and energy, a little bit soft here, 0.1%. They were looking for 0.2, and on the year to year, that equals out to sideways activity there, 2.4 in line with expectations. Scott, I'm taking a look at these numbers and I'm thinking this is probably not the kind of thing that's going to move the needle in terms of expectations for the Fed and for a rate cut. I mean, these were for the most part in line and nothing to really be concerned about here.
Exactly, and I think that's why you're seeing, the market really unchanged. Futures market's pretty unchanged, and if anything, right now, Ben, a softer number is probably one of those good numbers or Goldilocks numbers for the market, just reinforcing that it, like you said, it won't move the needle for the Fed, but maybe just reinforces that more rate cuts are coming.
Yeah, Scott, talk to me, because this is really in line what we've been seeing in terms of PPI and we also had the jobless claims though this morning, and really we continue to lean on the fact that the labor market remains strong here. Consumers remain strong, one thing I'm focused on here again is the fact that we just continue to see, even with Fed rate cuts, even with this stimulative type monetary policy, we continue to see very muted inflation for the most part across the board. I mean, what does this really say in terms of the U.S. dollar? Because it started to back off a little bit too as well. It seems like maybe it was looking for a little bit more elevated numbers this week in terms of inflation pressure.
Yeah, the dollar is definitely getting lofty, traded up to its highs of the year here. Like you said, it just backed off a little bit. I think it's trading down about 0.3 or 0.4% right now. We're seeing some of the other, global currencies higher against the dollar, the Aussie dollar, the yuan, even the euro is upticked a little bit here. However, though, there's going to come a point, Ben, where the consumer, as strong as they have been, and that's really what has held this market up, at some point here, and hopefully it's not before the holidays, but we're going to start seeing some cracks there.
Yeah.
And that's where I think that, that's where the trouble's going to start.
Yeah. Scott, talk to us about some of the volatility in terms of the U.S. dollar overnight. I mean, this was directly tied to U.S.-China trade talks, no question. I mean, is this what we should expect to see today in terms of some of the headlines as they come across the wire?
Yeah, with social media and the not minute by minute, but literally nanosecond by nanosecond headlines that we're getting, we're going to see that volatility. What did we see? What kind of range did we see in the S&Ps last night alone? 40 points in the matter of just a short while based on the headlines coming out. And that is the difficulty and also the beauty of trading in that market right now, is to take advantage of that volatility. However, if you're going to act on one of these headlines here, man, oh man, you better have some quick stops in place, because as we have seen and as we become accustomed to, we can see a reversal here in no time at all.
Yeah, no question. Speaking of headlines, let's go head across the big pond, because there's been some headlines this week out of the UK Brexit negotiations, the ups and downs associated with it. Scott, can you fill us in on the latest and what you've got your eyes on, and first and foremost, what we should be focused on?
I've discussed with you, Ben, and I've thought for the last couple months that we may see another extension out into 2020.
Sure feels like it, yeah.
And we're getting down to the wire again here. This is the umpteenth time we've gotten here. We're only a few weeks away. And, the rhetoric, we saw Angela Merkel come out and say, it's just not going to happen. And we don't know really what Boris Johnson has in place. And he's set for this hardline exit here. I still think there's a glimmer of hope to get that extended here. But boy, the next 2 weeks certainly going to be very interesting.
Yeah, talk to us about the euro currency, Scott. I mean, it's going to be interesting there as well as we watch, because ultimately the Brexit negotiation process impacts the euro currency as well. We've got Mario Draghi, who's on his way out. There's been some contentious debate here about the most recent ECB meeting and how Draghi basically shrugged off some requests for QE.
No doubt about it, and there's just such massive headwinds for the euro, and as I mentioned earlier, we are seeing the euro tick up a little bit today just on some dollar weakness. However, that's a level I think right around 110 though that we haven't seen in over a week, and again the headwinds coming into the euro, boy oh boy, it's really difficult, and we don't really know what the outgoing Mario Draghi is going to do here. I mean, we see some headlines, and we just really don't know what that QE or what sort of easing they're going to employ here. So, that's going to lead to continued volatility, and that's going to lead to some uncertainty coming up to the Brexit situation in the next few weeks.
Yeah, expectations are that the ECB is going to have to do something at some point soon to resolve some of the issues that they've been dealing with. Again, low inflation, low growth, and economic concerns there as well. Scott, really appreciate you joining us here on a Thursday to talk currencies, and we're going to keep our close eye, I should say, on some of the headlines related to trade this week. Traders at Scott Bauer, he's the CEO of Prosper Trading Academy.